Property values are still rising here on the National Real Estate Cafe, and they're also rising in your town, according to the reports we have today.
All right, so this is your May home appreciation update. We're going to start doing these monthly so you kind of know the trends. And remember, the trend is your friend. A lot of times you're going to hear about a report here and there. We've been saying this for 8.5 years. I stole that from Gino. He loves that saying, is because that's what makes a difference. One report the media will jump on. We had a lot of low reports because the interest rates were high and the housing market took a correction, a little stall.
So one of the best pieces of advice we took from Darren Hardy, which is ignore the noise. And so when you look at trends, you're ignoring the noise. If I was to tell you 40 years ago in 80 years ago, whatever it is now, in 1929, that the stock market was a great investment, you would have said, absolutely not. That's the worst advice I've ever heard. What would happen if you would have invested back in 1929 and you still had that same investment today? I think you would have done all right.
$1 billion.
Totally. So what we're getting at here is that CaseShiller, which is one of our favorite reports, and although it's naturally dated because it's information that's a couple of months old, in order to compile the information, any data, by the way, Don, is already old by nature. It reflects, so Maes Home Appreciation Report is actually reflecting the feeling of home buyers in March, because that's when those offers were written.
So this is just the 20 main city index. So we're going to show you the difference between the 20 city indexes versus the predicted appreciation levels nationally. You can see that some of the cities have mellowed out. You got Las Vegas still on fire, Phoenix on fire, and Tampa on fire.
Which is interesting because what we had on fire last year at this time was Portland, Seattle, definitely a different set of cities.
Yeah. Look at San Francisco now, 1.6. I wonder if it's because the average sale price of a home is $1 million
in San Jose and San Francisco.
That's right. But still, we have appreciation. We said you would. When we said it would slow down between 3.5% to 4.5%, boom, look at what we have there. So let's go to the national index. This is the FHFA Housing Price Index. And you can see that it also is up. But larger because it's not just the main cities, which are higher priced in most cases. So some of the lower price homes are still going up even faster than the main cities.
Well, what's really nice about this report is that it was above expectations. Expectations were a little bit tempered because Q4 and Q1 of this year were both a little bit off camber due to the interest rate hikes that we saw at the end of last year. So this is more representative of today's interest rate environment, and it might slow down even further if we had rate rises. However, it seems like the Fed is being very dovish, and it looks like we're predicting low rates to come for the rest of the year.
So a great time to get in the housing market. If there's a real estate agent that's watching this, share this with your clients. Please get them into a home. That's our goal, is give you keys. Nothing like home ownership, nothing like getting great information on a daily basis by texting NREC to the number 5885.
Watch 8 years of videos to see if these two guys know what they're talking about at donandgino.com.